Good evening, everyone. Hi, this is TraderSwift, and tonight I thought I would give the Swing Chat channel a bit of a overview in video form about how I trade and how I view the market. It was a big day, big last couple days actually, and I don't know. There's a lot of indecision, so today's probably a pretty good day to do it. Um, for those of you that don't know, I like to trade stocks that are up and to the right. I like stocks that go up, obviously. Um, I also, I'm not really much of a day trader. I mostly swing trade. That's what I've been doing for about 15 years. Um, I usually hold stocks anywhere from a few days up to about 3 months maximum. And the reason why it's 3 months is I never hold through earnings. I've been pretty vocal in the channel about that just because I don't want to see anybody get burnt because earnings can turn out bad sometimes. Anyway, okay, just to start out, one of the first things I do every day and throughout the day is I look at the core indexes. QQQ, SPY, IWM. So QQQ is the NASDAQ index, mostly tech stocks, weighted heavily on tech. I know Apple's one of the biggest holdings. SPY is based on the S&P 500, and the IWM is based on the Russell 2000, which is the index for the small cap stocks. I like to look at indexes because it really tells the overall picture of what's happening in the market. So this is QQQ. As we see, we had this really big dip in December, and then we rose all the way up through the year through 2019. We kind of topped out a bit, and then around the May time frame, all the way May to June, had a slight retracement, which was, I believe, about 10%, which is the definition of a correction. We've recovered. We went to the highs. We took out the highs, and then now we're kind of consolidating a bit up top. Actually, I should change my cursor here. Okay, consolidating here up top. Now, these last couple days, we've had two really hard down days. One thing that really concerns me is that down days on increasing volume. Volume is my biggest indicator. Well, volume and price action, obviously. So we have price here and we have volume down here. I tend to give more credibility to high volume days. So today's action was down on heavy volume. It's more than double the average here. Here's another high volume day, which funny enough happens to be an inflection point. Up here, just kind of consolidated. Really, we just ran out of gas. No more buyers. So without any buyers, it has one direction to go. And as you see back in late December, it kind of took a dive with accelerating volume. So those are the types of things I look for. Usually stocks will return to high volume points. So that's one reason why volume is so important. The other thing I look at is price levels. So I'll base those price levels either on swing points, like here, a swing down, swing up, or sometimes high volume bars. And you'll start to see that over time as I show other stocks. I also like to look at the indexes as well as stocks on different time frames. I trade almost entirely on the day time frame. Because I hold stocks a few days, a few weeks, a few months. It makes sense to kind of cancel out some of the noise that you see day to day and really kind of focus on the daily. But I also really like to look at the weekly, and I do look at the weekly always on a weekly basis. It's a Sunday night thing. It's really good to kind of step back and look at the longer time frame. So this weekly chart will show all the way from 2016 to 17. That was a good year, went up. 2017 to 18, another great year. 18 to 19, very, very kind of mixed. And then this year has been up. We had a slight correction, and then where do we go? The good thing about the weekly charts is that this reveals a lot of other patterns that we may not see on the day-to-day chart. So I commonly trade a pattern called the ABCD pattern, where it goes up, it retraces a little bit, maybe retraces halfway, and then will go up the exact same distance as the beginning leg. A lot of people ask me, oh, well, you buy breakouts, you buy when a stock is at an all-time high. How do you know where it's going to stop? Well, there's a concept called the measured move, which is where you take the low swing point and add up the distance between that and the beginning of the A leg, and then you attach that on right there from the C to D leg. So on the weekly chart, we're actually looking really good on the index. We've gone up. We're right at that swing point. This is actually a decent level to buy in the looking at it in the longer term, and then we'll have a price target probably around 220. Just guessing. But I don't trade on the weekly. I do use the daily, but a lot of times the weekly will reveal patterns that you may be missing. Sometimes on the weekly chart, you may see a stock really extended. Been trading Coupa a lot, and it is extended on the weekly. Here we have the A leg, the B leg, A leg, B leg, C leg, and then D here. So we hit our price point about right here, and it actually kept going on the weekly. So that was an extended stock. That's why I wasn't surprised when it pulled back a little bit starting last week, and then this week it's continued. So this actually is a this 130 area would actually be a very common area for it to come back and test. Maybe even down to the 120 area. But anyway, the weekly will tell a whole different story. So kind of going back to the indexes, I'm going to go back to the daily QQQ. So what I saw here is, yesterday it came down hard. We've been consolidating at the top. It came down hard, and that was on heavy volume, more than double volume the average. And that average line I have going here, it's a 20-day volume average. So that was concerning in itself. If we stayed within this bar range today, and maybe took out the range. If you remember earlier in the day, I was somewhat bullish when we were up here and we'd actually surpassed the top of yesterday's range. Well, in that case, that bar is almost invalidated when you take it out. But with the various trade war tweets we had happening today, the market, if I look at the intraday here, market taking this dump here. We actually ended in a pretty bad spot. So we ended with sort of the closing bars below yesterday's close on accelerated volume. So what that means is, okay, we have more sellers today than we had yesterday, and increasing sellers is just going to tip off. It's gonna mean bad financial headlines, which is going to mean it's just going to be self-fulfilling at some point. Now, the only thing good happening today was it did not seem to close below yesterday's low. Now, if that was the case, that's that's even worse. So where's it going to go from here? Well, what I look at is where's the next logical level. So just based on some lines drawn. Now, I wouldn't pay too much attention to these lines. These have been here for a while. I'm not even quite sure when I drew them, but and I can tell you, like this one was drawn because of this high volume day. That's a key support level. This one was drawn because it was a swing point, not necessarily a high volume swing point, but it was a swing point, and then it was retested here. So we could we break below this. It would be very logical for us to come down and either test this level or test this level. So that's what I'll be watching. And if I do want to pick up a position in something, I may be watching the intraday, have that line drawn out, and then watch the intraday, 10-minute, 5-minute, 1 minute, something like that, and actually watch for a rejection, and then maybe I would enter. But as I've said a lot of times in the swing chat, The safest bet is actually trading those breakouts, trading right there, right at at the prior swing point and above. So that's what I try to do. But anyway, like I said, the QQQ index not looking good today. This is a collection, I believe, of 100 stocks. So it's an average of what's going on. So across the board, a lot of selling today. Looking at the SPY, which is based on the S&P 500, we have a little bit worse story here. We have, we closed at the daily low. We closed below yesterday's low. We went up and tested yesterday's high. That was rejected. So, and that's also on increasing volume. Looks like we have taken out this swing point. Taking out that swing. Let's see. Yep. That looks like what was tested yesterday. We could hit any of these. This may be a good one right here because it was tested first. First it was resistance, later came support. So I would typically draw a line here, and then we break below that, then this level here is definitely in play. We don't want to see that happen, but we're definitely in play. The big thing I really want to communicate is it's good to have the longer term view. So many people look at only the 5-minute chart, the 1-minute chart, etc., and you have no idea which direction the stock is going. So the daily chart really does give you a good indication there. IWM. This is Russell 2000, the small cap stocks. This has not been as strong as the Qs and the SPY, and that's actually not a good story for a longer term bullish market, because generally it's the smaller cap stocks that lead. We never actually even made it up to the highs from last year. We kind of stalled out here. So, but anyway, not the end of the world. But here, we were watching this level, and that got rejected just like the other indexes. Just something I keep an eye on. So let's move into other stocks, and I'm going to be talking about a lot of the stocks that I post about. I'm happy to review other ones, but I like to keep my watch list small so that I really get to know them, get to know their personality, and over time can just instinctively trade. Okay, so starting with Team or Atlassian, great company by the way, but this was actually one of the strongest stocks of the day. It closed setting right at that top swing point right there. So this is definitely something to keep on your watch list. Even though the broader market was down, Atlassian was up, so it's showing really good relative strength. Tried to break out day after earnings, but based on I forget what actually caused that to hit. But overall, if you look at this chart versus the index charts, Team much stronger. This is up and to the right. This is an average of the other stocks. So if you go back and look at Team in December, when the broader market took a nosedive here, look at Team. It's hard to even see where that was. This stock has held up very well. So as a company, they're doing well. Their their revenues are increasing quarter over quarter. So there's really no reason that it won't continue. So that's the type of train I like to jump on. And a lot of these stocks that I'm going to talk about today are this same shape, up and to the right. If I look at the weekly chart, even more. And that's where we start to get worried a little bit. This is the one negative of these types of stocks is we are extended. We do have a completed ABCD structure here. It may consolidate here for a while, and that would be perfectly healthy. But that's just something to keep in mind. Like I said again, I don't trade on the weekly chart. I trade on the daily chart, but it is always good to have that context. CrowdStrike, another name in information security areas, also a recent IPO. A little bit higher risk being an IPO. I've been pretty vocal on Swing Chat that that I want CrowdStrike at 80. I've been very patient. I had an order in, and it was right here. It didn't get filled on their earnings report, unfortunately. But I did not have FOMO. I like to be patient, and I'm just going to wait for it. Now it has built a nice consolidation, so that gives me confidence that that it will go higher, because that means a lot of people are buying at this area. So the next logical place to buy this would be upon breakout to new highs. So I'll be watching that. Neo's a little bit newer one added to my stock list, and my watch list, and I actually need to do a bit more research so I understand their business. They have a nice shaped chart, again up and to the right. Today was a big day. They had a breakout based on earnings. I think the earnings was 2 days ago, but they paused a bit due to the Fed, and then they let loose today. I actually bought in earlier. I rode this a little bit today, but ended up getting out because of that broader market action. I just didn't want the risk of holding a lower dollar stock being under $30, a little bit higher risk. So I just got out of it. I didn't really want to take that hit, but they had an awesome day. Looking at the volume, I would have liked to see higher volume. Telling me more conviction. This is above average, so that's okay. But we'll see what happens. If we had volume like we had over here on this day, I would have no doubt this is going higher. Given the volume is relatively a little bit lower, I mean the overall market volume was high today, so that makes sense. I'm not going to read too much into that volume bar, so it wouldn't surprise me if it comes back and tests this breakout area, and if it does, I'm going to buy. No question there. Zendesk, another good company. I've been trading them for a long time. They have a really nice chart on the long term. Completed ABC structure, and then they consolidated again here. They had earnings, got kind of hit hard on that, which is okay. Sometimes earnings are released and they're favorable, but the stock still gets hit. Live with that. Sometimes you can get some good deals that way. Normally, in normal conditions, I probably would have picked up a little bit of Zendesk right in this area. But just kind of given the Fed yesterday, I wanted to trade light, and then given the action today, it's not something I really want to get into. The next level down is probably around this 79 area. But definitely something to keep on your watch list, especially if it finds support right here. That may be a really good buy. Smartsheet, another good company. I actually rode this breakout here all the way up here, so I really did well in Smartsheet recently. I sold near the highs, I think on this day, or after that down day, thinking it's time for this to cool off a bit. This is the next, this 49 area, 49.30 area is the next logical place to pick up Smartsheet. Again, I'm trading a little bit lighter right now because I do want to watch what the broader market is doing. But this could be a pretty good opportunity, especially if Smartsheet does not break below this level. Then we are strong here. We have a nice ABC structure setting up. I have a price target of 64, which would mean from here to here, retrace back to here, and then go up to 64. That may take a couple weeks, may take a month or two, but hey, 10 to 20% profit is good by any measure here. Beyond Meat. This has been a little bit crazy one. Um, yeah, I'm not going to touch it in these levels. I may pick it up again when it crosses this high volume swing point right here, and we're back in the clear. I may want to touch it down here, um, better yet down here. But as it's kind of floating along in the middle, it's really hard to pick a direction. This is high volume. A lot of people are trading it. Um, it's high risk. If you're going to be trading this, and this one, I would trade it small. Seems to always be my advice, but it's better to be safe. Coupa software, very similar to Smartsheet. Another chart, you do see this extended pattern, so I am glad it's pulling back. This is a really good area to pick it up right here. 128, 129 area. If it's rejected, or the safer bet would be let it come back, let it go up to new highs, and when it breaks out to new highs, that's going to be your most probable trade. Rapid 7, I love it. It's been running as well. Again, completed ABC structure. I'd love to see it come back to the 56 area or take out new highs. So I'm kind of waiting on the sidelines there as well. Octa is just a strong name over and over and over and over and over. I picked up a few Octa shares today, but again, with the market dump, decided to just get rid of that, just to kind of play it safe. I really don't like seeing these broader market conditions in the way they are. CyberArk, strong name. Pick it up maybe the 130 area, the 120 area, or new highs. As you see, I mean, these stocks will hang around for a long time, and it's important to just be patient. Strategically set alerts, and that means if you have a stock watch list of 10 or 15 stocks, you're probably only going to be taking 1 or 2 new trades per day in this style, and that's okay because a lot of us have things to do, jobs, family, work, stuff like that. So Zscaler, another strong name, up and to the right, goes up, consolidates, etc. I like it at the 79 level. I like it at the right at this level here. This is one I would have picked up today, but given the broader market conditions, decided to just stay on the sidelines. Twilio, they just had earnings. They got hit a little bit, but it's the volume is not as much as a typical earnings hit, and I actually think a lot of that is just because one, it was extended, but two, with the Fed announcement and the broader market dump today, it's just paying the price a little bit. It is right at, I would say, let's see, I'll probably, yeah, well, this is probably the key level I'd be looking for. If it takes out that 142.16, you're probably good to go for newer highs. MongoDB, I'm frustrated with this one. It had a big run up and then has just consolidated, ran up again, consolidated, and broke down below that level, and it's just kind of hanging out. I would consider a position above, let's see, this 154 area, but it's been pretty volatile, so it's just mostly on my watch list here. Shopify, it looks like did they have earnings today? Wasn't even watching. Shopify, so they're at a good level. If I remember correctly, they're extended. Yeah, this is just straight up. So that you could say this here, slight consolidation there is an ABC, but yeah, I would be careful. But hey, taking a small position if you like the company, not bad. If you're going to buy as it's crossing the swing point, and then just have your stop right below the swing point, and you'll be good. But yeah, Zoom, good company again. This chart actually looks a lot like Crowdstrike, the other IPO. I did own some right in I think the 92 area. I picked up some here and I wrote it up. I made a nice little profit. I haven't owned it since. If it retests this area, that would actually be a really good area to buy again. Or if it takes out, let's see. You could potentially use this one, but it's been so volatile. I would probably, the safer bet is probably going with this swing point here. This was a test and a rejection, and this was a true swing point with the consolidation. So I would probably look at around the 100 area if I were to get into that. Probably not the best trade. AMD, they've been doing pretty well for a larger company. They have broken down the last couple days. You could buy it when it's back in this range. I probably wouldn't touch it until it's breaking out new highs, but that's just me. This stock really doesn't move fast enough for me. A lot of these other names I mentioned will move a lot faster. Boeing, again, I have this on my watch list. It's sort of a short candidate. They're actually in a good position to short. I would short below the swing point. Probably not going to do it. I don't really trade short that often, but I do sometimes when I'm bored. Roku, I have this line here just to remind me of earnings, so I'm just not even going to touch it right now. Slack, yeah, I like the product, but I'm not going to trade a chart like that. And there's a good reason why. Let me look for the arrow. Here it is. This is why. Yeah, that's not the direction I trade, but maybe one day. Once it finds support, maybe I'll look into it again. Disney's doing well. As Netflix has been having trouble, Disney's been doing pretty well. I put it in the camp like AMD. I usually don't trade larger companies like that. I want companies with more growth. But anyway, a lot of people like to talk about it, so I do watch it. Workday, very very similar chart. Rejection. This area could have been good, but I'd probably wait until maybe next time I'll be more prepared and have actually analyzed these. But the safest bet's probably here. As it takes out that area. Maybe next time I'll actually analyze fewer stocks and give you a little bit deeper analysis, but I feel like I've been droning on and on. Fiverr, another IPO, straight down. No thanks. Tuffin. I was interested in this one. The pattern was looking really good. And I actually did own some around this area. But I had a really, really small position. I usually don't trade cheaper stocks again, just because I feel like the risk is high, just because the volume is lower, and things like this happen. Someone dumped their stocks, and the price took a dive, and the volume actually isn't that high. Yeah, it's higher than average, but I don't know. It found support here. I'm just watching it. I don't really have interest. Garden Health, nice long consolidation there. There may be some opportunities. Probably just skip this one right now. Paysign, everyone asked me about this one. Earnings, don't trade before earnings. And, I really don't like how hard that was hit. But maybe there'll be some opportunity in the future. What was a C Unlimited? I'm just going to skip that. JNUG, gold has come back. You know, if just one comment about gold, if the broader market, you know, the Qs and the SPY continue to take a major hit, then gold may be a place. Gold and treasury bonds. So you would look at TLT. This may be a way. So when stocks are taking a hit, this treasuries will rally. So this may be something you want to look into. I don't typically trade it. I also don't typically trade gold, but you know, something to keep an eye on. Chegg. I don't even know what company this is. A few people were asking me about it. You know, this could be a buy when taking out the highs, or sorry, not the highs, but the swing point right here, 46. But I don't know. Bitcoin, yeah. If you're trading ABC structures, you could potentially buy it when it takes out the 14,000 mark. You know, it goes up, consolidates down, and then takes that out with a price target probably right about 22,000. I'm not currently in any cryptocurrencies. I've traded them a lot in the past, but made some money. Mostly avoided the mess, but I don't know. There's a lot of money to be made to stocks, so that's where I like to focus. Really, that's about it. I have no idea how long this video is, so hopefully I haven't driven anybody away, but hopefully you've also learned some things. So if you like this, let me know, and I'll consider doing some more in the future. But anyway, take care, and I'll see you in the chat. All right.